Oh man, so a hotter than expected PPI inflation figure has just come in. Does this now remove the possibility of a 50 basis point rate hike next week at the FOMC meeting? Remember, markets were initially pricing in 50 basis points. That would have been the first pivot after 4 75 basis point rate hikes, and markets were looking forward to this moment next week. But we had the non-farm payroll surprise in the wrong direction last week. We've just had the PPI, which is the producer price index, come in hotter than expected. What does this mean for markets? We've currently got Bitcoin above 17,000 here, sitting just shy of 17,200. What does this mean? Where could we be heading to? And what do we need to be looking out for next week? A huge week with the FOMC meeting, with the next rate hike decision. We're going to take a look at the charts and the key levels. Smash up likes. Don't forget to subscribe. As always, check out the links in the description if you want to buy any cryptocurrency. I personally use Bybit. I'm doing a lot of my trading day to day using Bybit. Definitely check that out. Links in the description if you're looking for an exchange to buy some cryptocurrency with. Now, as you can see, we had a nice run here on Bitcoin. We had a good breakout. We saw we were consolidating a little bit here at 16,700. And we're wondering, are we going to have to come back down here to 16,200? We saw a little bit of impulsive move, but as you can see, it wasn't the best of moves because you didn't get higher than this previous high here. The initial high on the 5th of December took you as far as 17,400. So remember, the key resistance level is this 17,600, and we've not quite managed to get there. If you look at what we've just done, we've created this peak here. We went create a higher peak, we created one here. It's almost sideways in this direction. We've not managed to go and get that big move which can push us straight past that level, right? Which is what we want to see, is we want to see us go past that 17,600 June lows levels hit. Now, part of the reason why we've seen this decline over the last couple of hours is the producer price index, okay? So what you want to look at is the PPI figure. And this figure came in at 0.3% month on month versus the consensus of 0.2. So the markets were expecting 0.2. It came in hotter than expected at 0.3. Now, inflation is still trending in the right direction, just like we saw with CPI. It's trending downwards, but still higher than expected here, which is showing that Jerome Powell's rate hikes aren't taking as much of an effect as we previously may have thought, right? And this is the yo-yo game we're currently playing, because you look at, let's say, the ADP jobs report and it shows that the labor market was tight. Then the non-farm payrolls came out and said, no, it's not as tight as you thought. So it's like, oh, great. Are we rallying? Are we not rallying? And then we wait for the PPI, and the PPI says we're hotter than expected. But then what if we get a CPI next week, which is showing that inflation is plummeting downwards? So we've got to take all the data that we're given, and then using all of that data, we've got to make our best approximation. And what you can see right now is, if we refresh this, the market, despite that reading, 80% of the market almost is still expecting 50 basis points. And I'm not surprised by this. Yes, the reading is hotter than expected, but remember, Jerome Powell came out very dovish last week when he spoke and he addressed markets and he said, we need to slow down, basically, right? He pretty much telegraphed it. We made a video about it, that he's going to have to do 50 basis points. He'd rather do that now, and if needed, rate hike for longer and stay there for longer than doing the opposite, which is keep going 75 basis points or do 100 basis points and break the market, tumble us into a deeper recession than perhaps we're already in. So the markets are pretty much pricing in the fact that there's 50 basis points. Now, this is what we now need to be cognizant of. If we do not see 50 basis points, this is where the issue could now start to appear. Now, I'm in the camp of seeing 50 basis points. I'm with the 78% of people who think that. I think it'll be a shock if we don't see 50 basis points at the next meeting, because Jerome Powell made such a concerted effort to tell us that he's going to slow down. But that also means he can rug pull markets. So next week, after we get the CPI on Tuesday, the FOMC will meet. They normally meet over 2 days. At the end of the second day, we'll find out from Jerome Powell if he's giving us that 50 basis points, plus the press conference with the Q&A, which also moves the markets as well. We will live stream that here as always, so make sure you subscribe with the bell notification on. But if he doesn't do that 50 basis points, if CPI on Tuesday comes in hotter than expected and he decides to change his mind and do 75 basis points again, that could rug pull the market. So you've got to be very, very careful. Now, there's two ways this can happen. If the CPI comes out on Tuesday, the markets can very quickly start to price it in. So if it's a really bad CPI reading where it's hotter than expected, you could see this percentage move in real time over the next few hours. As the market starts to deteriorate, you'll see a red day in the broader markets, and you could see that this percentage will pivot across to 75 basis points. If it doesn't and the markets don't react, but then Jerome Powell does 75 basis points, the markets will freak out. Okay, so it's all about marrying up expectations versus what Jerome Powell actually does. So still a lot to play for here. Wider markets are still quite tentative. It's been a bad week here for the wide equity markets, which of course spells a little bit pain here for crypto as well. You can currently see that the Nasdaq is barely flat, 0.5% up, but it's been a yo-yo day. S&P 0.3% today, Dow Jones flat on the day, and it's the worst week since September, right? So it's been the worst week since September. Obviously, the equity markets have managed to have periods where it's been rallying, but crypto hasn't been able to keep up, partly because of the FTX drama and all of that unfolding as well. But the good news is, we're starting to feel like we're getting our footing back a little bit. Now, I don't want to jump the gun and say, oh, everything is rosy, but we are starting to get less panics, right? Remember, after the Terra Luna collapse, it took about 5-6 weeks before we saw that peak contagion. And if we were to use that same kind of timescale, we're getting to that point now where if there were immediate companies who were in trouble because of the FTX collapse, we should have heard about it. We should have started seeing some smoke. We should have seen some fire. And we could have started seeing, okay, who are the casualties right now? The fact that we're seeing that there is some resilience in the market, that is a good sign. We didn't just see a mass collapse of loads of exchanges, loads of hedge funds and the rest of it. It looked like a lot of it, they were collapsing before FTX, which is very, very interesting indeed. Now, if we go on, head on over to CoinDesk, what we can see, Sam Bankman-Fried has decided to testify. Okay, so he has agreed to testify at, well, he didn't really have a choice, really. He was cornered into doing that. So whether he does that remotely or whether he flies across to Washington, I believe he'll do that remotely. But also, interestingly, I don't want to cover off Sam Bankman-Fried too much, but if you're interested, go on Twitter. Him and CZ are having a dispute. CZ's pretty upset right now. I don't know why. Normally, he's quite reserved about these things, but he's definitely biting on some of this conversations going on. You've got Do Kwon weighing in, Suzu from 3 Hours Capital, CZ tweeting a lot, Sam Bankman-Fried tweeting as well. And this is to do with, you know, the original exit that Binance did from their original investment in FTX, and there's some disagreements around that as well. So feel free to jump over on Twitter and kind of have a read of that. But in reality, does it matter? No. Let them bicker. The reality is we want to know the truth, and hopefully whoever's doing the hearings can start digging on the right bits, find out what actually happened, and make sure that those that are liable are made to justice is done, right? We want to see justice done. We want to make sure that we learn from those mistakes and we move on. And that's what we want to do as a crypto space. Now, coming back to the Bitcoin price, what are these key levels we're looking for? We've got to get that 17,600 level. If we get a good CPI reading next week, that could really be the win behind the sales to help us go do that. But if we get a bad CPI where we miss, then we've got to look at that 16,200 level and maybe even getting prepared for 15,500. I know that sounds crazy, but right now, the reason the markets are a little bit buoyant, a little bit excited, despite everything else that's going on, is they're hoping that we're going to get that 50 basis points. They're hoping that Jerome Powell has some control over what's going on, because right now there's still worries about a recession. There's still worries about inflation becoming out of control. So we need to see that inflation reading come to the downside on Tuesday. Let's also take a quick look here at the dollar index just to see. Remember, we're inversely correlated to the dollar index, and you're seeing a little bit of a couple of 4 hourly candles here of green here on the dollar index, but still forming lower highs and lower lows. So this is a nice downward trend here on the dollar index, and in a normal market where this FTX issue wasn't an issue and where crypto were not struggling, we would have expected to have a nice rally by now, as the dollar index has fallen quite a lot here to the downside. And if we take that measurement from where we fell here, let's take this from this candle here, you've had a fall here of over 7% here on the dollar index. And normally that would suggest a good rotation of risks starting to come back into the markets. But because of the FTX collapse, because of all the crypto specific fears, we've been unable to take advantage of that. A few other things to look at. Let's also take a quick look here at the Bitcoin dominance. It's been a little bit of a while since we've looked at the Bitcoin dominance. And I do want to mention the fact that we are still within our zones. Okay, so you can see here, we did get the bounce from this 39.65 level. And do not be surprised to see dominance start to take a little bit of a move and maybe stretch its legs up towards the kind of 43% here, as Bitcoin starts to stretch its legs and people start buying the dip and start accumulating their positions again. Because one thing is for sure, we're at peak fear right now. And when you look at where we're at and measure the sentiment, whether it's from your friends, whether it's from people on YouTube, whether it's crypto Twitter, people are extremely, extremely fearful about crypto. They don't believe in it. It's a scam. They're like, oh, I've lost all my life savings. It's rubbish. It's people just pumping and dumping it. that is always when historically crypto has gone on to do its best work, is when people doubt it. So what we've got to do is remind ourselves what the technology is, why we're investing in it, build our conviction, and continue to stay the course. I mean, if any of you guys have been for a few cycles before, this is nothing new for you. If this is your first cycle, it's going to be extremely painful. You're going to doubt yourself. Your family members will be saying, what are you doing investing in crypto? You're going to look at your portfolio and be like, what am I doing investing in crypto? I could have bought a house. I could have bought a car. I could have invested in a business or a startup. And it's painful. And I know that. But if you navigated all of this bear market to this point, and then you're going to capitulate at the final innings, that is hugely painful. And that's the kind of regret which I went through in my first cycle when I got capitulated out. And I know a lot of people will capitulate in this cycle as well. That's a normal course of a crypto cycle. And those who capitulate will promise themselves they'll come back in the next cycle. But who's to say they won't capitulate again in that next cycle? So there you have it, guys. A shock PPI reading. Hotter than expected. Slightly spooking markets. But markets remain firm that we're still going to see that 50 basis points. Remember, CPI reading on Tuesday could be the final catalyst which could shake whether we see that 50 basis points or 75 basis points. We will be covering that off live here on this channel. Make sure you smash that like. Don't forget to subscribe. Check out free TA course, jars.uk/TA, completely free. EMA ribbon, Bollinger Bands, head and shoulders pattern, ascending triangle, descending triangle, all the things you need from a TA perspective, from 10 years of experience from traditional finance and crypto. I've put it all in one place. And it doesn't even cost you a penny, so definitely take advantage of that. Thanks for watching, guys. Go watch this video here, and I'll see you in the next one.